Thank you. I'm quite glad that it's cold in here because it will keep you all awake during the finance talk. I thought it would be appropriate first to set out what the general landscape is on financing in the shipping business. And I'm primarily talking about ships, but not entirely, because I think you have to really figure out what's happening here before you talk about the link between this and decarbonisation. The great comedian Bob Hope once said, "A bank is an organisation that will lend you money if you can prove that you don't need it." And of course, there's more than a little bit of truth in that observation. Most of the debt finance in the shipping market still comes from banks. And bankers are not professional philanthropists, even though some of them would perhaps have us believe otherwise. Their job is to price risk, and ideally to get paid more than the risk that they've priced. The pricing model in general looks a bit like a ship's consumption curve. At the lower end, supply is plentiful, pricing is competitive. And as we move up the risk curve, pricing can move exponentially higher. And all this is relevant when we think about finance in the context of bank debt. Non-bank lenders charge more. These alternative debt providers or credit funds have mushroomed in recent years, particularly when traditional ship lending banks exited the market after the last financial crisis in 2008. These lenders take more risk than traditional banks, but of course price accordingly. In theory, at least, they will consider investment projects where borrowers have limited equity, so they are an interesting source. When it comes to equity, as most of you know, ship owning is often a family business, using the company or the individual's own money, and often attracting money from other shipping families. A couple of PE firms, like Oaktree or KKR, are big players in shipping, but most private equity firms look for what they call special situations. And by special situations, they normally mean discounts on price. And in the shipping market, it's pretty hard to sell ships at a discount. Hedge funds, who I also mentioned, are pretty rare visitors to the shipping markets. They are really interested in derivative trading. A high level of liquidity and short-term volatility is what floats their boat, if I might use that expression. Shipping remains an industry which is poorly understood by the outside world, and that includes institutional investors, despite, as we all know, being an essential industry with a permanent capital requirement. The short-term market volatility in key sectors, coupled with an unfortunate reputation for lack of transparency, is enough to put most of them off. Add to that the often sensational stories in the press of how certain unscrupulous ship owners have fleeced poor, unsuspecting fund managers. And you can see why it's an industry that is often regarded with deep skepticism by outside investors. The first question to consider, therefore, is what will entice these investors to consider shipping at all, and then to consider whether the energy transition and the opportunities that arise from it will make them think harder. So what do investors actually want? Most of them want long-term visibility of cash flow and little or no residual value risk. And if that can be accompanied by some sort of inflation proofing, that would be ideal. So not easy. Investors like pension funds, insurance funds, or infrastructure funds will all have room to accommodate projects, in general terms, which have this long-term security of revenue, even with a relatively modest return. I must confess, however, that in our experience, they will ascribe a higher risk to shipping than to other asset classes. Even when we, as shipping professionals, might think that we have a project that is a dead cert, they certainly wouldn't think the same way. Maybe this risk premium will narrow over time when they become more familiar, but a lot of education is needed. So how does decarbonisation come into it? The point I'm making is that the energy transition per se will not make investors suddenly want to jump into shipping when they weren't there before. In fact, it's probably the other way around. Unless a new shipping proposition has a decarbonisation story attached to it, they're unlikely to look again. If it does get the second look, the key elements of longer-term revenue visibility and low residual value risk in assets will be essential. This audience knows full well that technological and regulatory developments are uncertain in numerous areas at the moment. That makes the task of sourcing capital all the more difficult. Or put it another way, the story has to be a very good one to attract the money. We can at least thank the Ever Given for alerting the world to the importance of shipping, a simple fact which seems to have escaped the majority of investors in the past. There's absolutely no doubt, of course, that we are an essential industry, but it's a pity that we need a crisis for the wider world to be aware of what we do. There's a difference between international and domestic shipping, of course. Most of what my company does is in the international market, where we run bulk carriers at the moment. But there are many differences, some of which I've highlighted here. One key one is that the domestic fleet is much older. The UK domestic fleet is at least 25 years old on average. And the government, of course, in a domestic context, is more able to intervene at the regulatory or policy level. So at Marine Capital, we're currently heading up a study for the government on commercial pathways to the decarbonisation of the domestic fleet. We've spoken to a host of stakeholders in order to understand the challenges and to hear some views about where government intervention might be most needed or most helpful. As we ostensibly speak to the money, the emphasis of the study is on financial mechanisms. In other words, are there particular mechanisms or structures, perhaps those which may have worked in other jurisdictions, which could be helpful in the UK? If the government is to provide support, where would that support be the most cost-effective? I'm afraid I can't give you a scoop, but perhaps I can state the obvious. The ultimate focus will be on fleet replacement, given the age of the current fleet and the challenge in obtaining viable retrofit or upgrade options for existing assets. This doesn't mean, of course, that upgrades are not important. We'll have to look at what can be achieved over different time periods, 5 years, 10 years, 20 years. In the short term, it's about upgrades, what can be done, how financially viable they are, and whether incentives will be needed. There are other funding gaps. Most people think about shipping and ship finance or port infrastructure finance, but there are other aspects of financing the transition that we need to think about, and perhaps one of those is how we finance new technologies, and in particular the rollout of new technologies. As you've heard here, and as again you all know, the government's been very supportive through a range of innovation grants, demonstration projects like the CMDC, but we're still feeling our way a little bit. Some people might say we're still feeling our way quite a lot about what is, about what is actually going to work and where and how it will be financed. And there are clearly still gaps. One of those we think is what we call stage 2 funding for new tech. It seems clear to us that stage 2 funding, in other words, where a product has a high TRL and is proven, but the company doesn't have the financial support to roll out the product commercially, is one area where a gap can be filled. And one thing that we're doing is aiming to bring to market a platform which will invest in these companies and provide all the equity that they need for this type of commercial rollout. I should also say that banks are, of course, interested in this, but they're only interested where the risk for them is extremely low. What that means to the project is that a great amount of equity has to go in it to make it viable. Again, one difficulty we have with this project is the lack of knowledge about shipping in the wider investment community. Investing in technology has been a big thing in the US, but not quite so big here in the UK. When our industry in general is considered esoteric, the level of penetration and knowledge about marine technology is unfortunately very low. And in some ways, this makes the opportunity even better. We're hopeful that this platform at least will help to go towards solving one of these particular problems. So let's get to the main, what in some ways is the main topic. Does decarbonisation make a difference to the finance landscape? Everybody knows what ESG stands for, I think. They do now. Although its definition in shipping terms is still variable. That's what we're finding out. It depends who's asking or who's answering the question. When we dealt with pension funds not so long ago, ESG was always on the agenda, but not top of the agenda. Now it's top of the agenda, first on the list. But the project still has to stand on its feet commercially from the institutional perspective. In other words, long-term secure revenues, low residual value exposure, even if the ESG test is passed. There's no doubt that a green project is more attractive than a non-green project. The question is, as I said earlier, more the other way around. Can you get your non-green project off the ground at all? Then there's a question about what qualifies as green. Investors from the EU, some of you may be aware, are currently poring over the EU taxonomy, which is known as the Sustainable Finance Disclosure Regulation, to understand, if they can, what qualifies as sustainable finance under that directive, and if so, which article of the directive they can use. While the EU authorities are quite laudably seeking to protect investors from greenwashing, the whole issue, frankly, looks, at the moment at least, like a golden opportunity for lawyers and accountants to make lots of money from consultancy fees. At bottom, however, we do know the direction of travel. Longer-term financing of ships, for example, will be based on measurable outputs on GHG reduction, like the Poseidon Principles. And those which seek a higher level qualification will have to demonstrate something better than compliance with the IMO timeline. In my view, there'll be plenty of investor appetite for platforms which can deliver these outcomes. So I understand, unfortunately I wasn't here yesterday, but I heard there's been quite a lot of discussion about offshore wind. And I know that my friend Stuart spoke yesterday about Operation Zero. It seems logical to provide green maritime operations in offshore wind. And of course, the UK is by far the biggest player in Europe. Linking commercial opportunity and finance with this progression, however, with a particular focus on UK companies, may be more difficult than it looks. The sector is obviously interesting to investors. That's non-industry investors. 3i owns SFACT, a big player in the SOV market, and Partners Group, a huge PE firm, has just bought North Star Shipping. One of the reasons that these businesses are of interest to those investors is long-term cash flow. However, as the sector arguably becomes more commoditized, traditional ship owners with a greater appetite for asset risk are coming into the market, and they could make life a little bit more interesting for these institutional investors. But let's consider the decarbonisation question specifically. No offshore wind operator that I have spoken to is yet prepared to pay up for a green SOV. Let's be clear about this. Nor are they incentivized to do so, as price remains the determining factor in the auctions for offshore wind. Owners bidding for contracts, and we as ship owners have bid for such contracts, are asked to provide the greenest available option at the cheapest possible price. And you would be not surprised to know that those two objectives are not easily compatible. If the government wants a genuinely decarbonised sector, it will have to consider how that gap can be bridged. And in reality, it will mean the prioritisation of decarbonisation factors throughout the supply chain, probably starting with the requirements within tenders for the operators themselves, and to make sure that this feeds through to the tenders for ships. There's another question about whether there's a link between ships potentially built in the UK for UK owners, financed here and chartered to offshore wind operators, a holy grail that I know a lot of people have been talking about. But charterers are not necessarily UK companies, and local content requirements would have to be a lot stricter to ensure that UK companies are favourites to win bids. I won't go into the question of whether or which UK yards are or could be genuinely capable of building SOVs, and we haven't had a sneak peek at the new shipbuilding strategy document, but there are challenges, and these are significant. I don't see the UK instituting anything that looks remotely like the Jones Act. So it's not clear to me how these dots can be joined. As we are now seeing a huge rise in domestic energy bills, the broader question, albeit one that applies here, as to whether the government is prepared to load increased cost onto the ultimate consumer through a decarbonised maritime sector, will come into sharper focus, I believe. I had dinner yesterday with my brother, who runs a will writing business, and he told me that his clients are increasingly requesting a green funeral. But when he tells them that the cost of a green funeral is twice that of cremation, they rapidly switch to the cremation. So there are going to be a lot more calls on the government's coffers in the coming months in particular, and a lot more questions asked about the cost of green initiatives. And I would say that levels of collaboration, which I've already heard a lot about today, both public and private, are going to have to be raised several notches for us to succeed in the medium term. Thank you very much.
Thank you. That was really interesting. Thank you.